All right, everybody. This is Dan Sheridan, and I'm with Tammy Chambliss from Texas. And I'm thrilled to have I've talked to Tammy, I don't know, three or four times
Uh-huh.
in my life. And she's, uh, uh, if you said to me, what do I like about Tammy the most, is that she has a passion for people getting learning trading. And she's at least what I've noticed, pretty selfless. She's just concerned about teaching them. She's uh, just that, very caring, and I
Thank
appreciate
you.
that it's
Thank you.
not, no hype. Tammy just wants people to get it and be sane about how they're doing it. So I
Yeah.
appreciate that. And what Tammy, as far as my background, what I've learned on Tammy is, she does a lot of 0 day and, different type trades, and we'll have Tammy talk about that. But I want to start out with a little bit on Tammy on her journey. This is probably the one Barbara Walters question that I will do today. And then the rest will be just talking some trading for a little bit. But
Okay.
Tammy, maybe share your journey, how you got into this crazy business, and maybe
Sure.
take us from kind of that level to where you are today, just so people get to know you a little better.
Okay. I'll be glad to. I in my career, I was an architect,
Okay.
and my dad was an accountant, and he was trading stocks. So I saw him as I was
Mm,
growing up trading stocks, and so
mm.
as soon as I had enough money, I was trading stocks, and
Wow.
got into that. As I was, probably for a few years before I got into options. But I kept hearing about options and I was wondering what they were.
Yeah.
And I got a flyer from an old company now out of business, Optionetics.
Oh, sure.
And they offered a course, or they offered a free seminar. Of course, it's just a lead into their
Oh, yeah.
pay 3,000 and take our
Sure.
course.
Oh, yeah.
But took their seminar, paid the 3,000 to take their course, and then it was like they teach you a little bit, and then okay, you want to learn more? It's another 3,000.
Oh, sure.
It was
Sure.
just I don't. It's not like a pyramid scheme, but it's a chainmail kind of thing
Yeah,
where
right.
you want
Right.
to learn the next step. You want to learn more about.
Yes.
Okay, we taught you about calls. You want to learn about puts? Another
Yeah.
three
That's
thousand.
another. Yeah.
So that has been very influential on me. I just felt so frustrated by that process of
Yeah.
having to. I felt like it was a scam, but yet there was still some good information there. So I did learn to trade options, just the basics. I didn't learn anything about rolling or, it was just tough. But they did a good job of teaching the basics. And then I stopped paying them and stopped taking their courses. And just after that, I just did it on my own. And one of the big helps was Tasty Trade when they were doing. I mean, they're still doing their seminars, but I think early on they were really good about talking about what they were doing and talking about their strategies and giving you all of the information that you needed to trade.
That's a good.
That's the thing that Optionetics didn't do. They tell you half the story, and you'd trade, and you just always wonder, what am I missing? There's something else here they're not saying,
Right.
and so as soon as I started having some success, I mean, I traded off and on while I was working. Um, I took those courses in, I think it was about 2005 or six.
Mm.
And then and I was trading off and on. I mean, some years I wouldn't trade options at all. I'd just do stocks. And
Yeah.
then I'd go back, because it just seemed intriguing.
Yeah.
And I like the idea. The whole investment industry is geared around having stocks go up to make money.
That's right.
If stocks aren't going up, you're not making money.
Period.
So it just seemed frustrating that the investment industry hadn't figured out a way to make money on both sides. And that's
right.
one thing that options offered, is how to make money regardless of what the market is doing. There are strategies you can use. So I traded and off and on, and really kind of got into the zero DTE around 2018, 2019. And I think that's when that was. I retired in 2017 and basically started trading full time since then.
Wow.
And so I was, it got into the zero DTE space. I just started realizing that you can trade longer options, and that's what most people did because that's all there was available at the time.
That's right.
The more that shorter term options became available, options is very much based on probabilities, and probabilities are based on number of occurrences. It's just like flipping a coin. You flip a coin once and it's a 50-50 chance of whether you get heads or tails. You flip a coin 100 times, you get closer to the true probabilities of that coin flip. Same thing in option. The more occurrences you have, the closer you get to the true probabilities of the options.
That's right.
So I got into the zero DTE sphere and really started having some great success. Like I just could never, when I was doing, I'd do some earnings trades, and some would win, some would lose, and I was probably, when I was working, I was probably making, when I was trading options, I was probably making about $10,000 a year. Not much. And that was just part-time and random trades. But after I retired and was able to do it full-time, and really focus on it, that really helped and on my journey. And I think that one thing I've always felt like is there is no secret out there about options. Even though Optionetics wanted to make it a secret that they could sell, I wanted to make it public and all information out there. So
Tammy, I'm going to give you an amen to that statement. That is there is no
exactly.
No secret. I love it.
And so I also was so frustrated when I knew this had to have some potential, but it took so long to try to figure it out. And how does this work? And how can I make this work to make good money? Because theoretically, it just seemed like it was prime for the opportunity to make good money out of it, to be non-directional and to make good money. So when I found a good system, I was very willing to share that information, because I just didn't believe in the hold the information close to your chest so nobody else knows it. And another thing behind that is I find that I learn more by sharing than I would by trying to hold everything close to my chest or hold it secret.
You know what? And I don't mean to. I just took some notes. I want to ask some follow-up questions.
Sure.
But some of these comments, I mean, it's just you just want to scream because people are like, well, what if I, keeping it close to the cuff, I've been teaching a long time, and I'll tell you something. I've realized, if I looked at 90% of the good ideas that come in the community, it's from other people. By sharing. And when it just, now getting people to share is brutal. But once you get, that's the secret. If you said, what's the secret is, the more you talk with other people, you're bringing people from all walks of life. Fred, he'll come up with ideas. I get ideas. I think I've been doing this a long time. It's wonderful. So willing to share, just like they say in life, if you're in a funk or whatever, serving and getting outside of yourself. And so good. I didn't mean to, that was one more amen, that willing to share, but it's better for you, right? I mean, not just better feeling, you're making if you have 50 people looking at a particular strategy, it's going to get better, right? Yeah. But anyways, go
And
ahead. Yeah.
the more people I have questioning it or questioning me and what I do, it makes me think about it, and
Yeah.
having to explain it to somebody, you have to think about what you're doing in more detail than just, if I'm just trading by myself and not really looking at it, I wouldn't even think of that question. But by somebody asking
And
me a
willing to
question,
change, right? Because
yes,
as you get
yes,
like, I'm older, and a lot of older people, maybe they've been doing it a certain way. And I had to be open. And I got this from people to say, am I willing to look at shorter term trades? Now,
yeah,
the
yeah,
easy Archie bunker is to say, short term trades are, you got to babysit, they're stupid, they're blah, blah, blah. Have you ever tried them? No. But once you try them, to me, it's like a whole new world, and it's a good world,
yeah, yeah.
once you know. But, anyways,
It is different than longer term options. It's
how did you do that? Was one question is, how did you get, you said 2018-19 zero day is when
uh-huh.
you started, which was
Yeah,
kind of at the beginning. You were
yeah.
doing farther out. Was it like love at first sight with zero day, or what kind of turned
No,
the
it
switch
was
on you?
well, there were there was a group of traders I was communicating with on Facebook and through the Tasty Trade Options group. That was a very active community. A lot
Okay.
of good traders
Mm.
came out of that group,
Oh,
and
sure.
I think we kind of all stimulated each other,
Oh,
and
good.
and all of us went off in different directions. But
Mm.
it was that stimulation from discussing ideas and things
Mm.
that got it started. But like I was doing 30-day options, and then somebody suggested, hey, look at these 7-day options that,
Mm.
instead of one trade in 30 days, you can trade 4 trades in 30 days. You
That's right.
make and you make a little more on that
Yeah.
7-day
Yeah.
than you did, 4 times the
Oh,
seven
yeah.
day options versus 1 times the 30-day options. You make more on the
That's
shorter
right.
term options.
That's right.
So we did that. And then someone in the group asked me to mentor her, and she specifically wanted to learn zero DTE. That
I
was
love it.
that
I
was a
love it.
big
So she,
discussion. And I'm
yeah,
like, okay, I got to learn zero DTE to be able to teach her zero DTE.
that's right.
And there had been a lot of discussion about zero DTE in that group. A few traders were trading them, but they would blow up. Like
Mm.
they'd trade a while and make good money, and then they'd blow up.
Yeah.
And but what I learned trading 7-day options is I traded that for about a year, and I this is without a stop,
Mm.
and
Wow.
putting on like Delta 10 or something. I don't even
Yeah.
remember what we were trading. Delta 10 7-day in RUT. We'd put them on every Friday, regardless of what was going on, every Friday.
Wow.
And then for the next Friday's expiration, and just either they win or they lose, and most of the time they won, until
Yeah.
one trade would just take out a few months worth of profits, trading without a stop.
Yeah.
And so I sat down after a few months, after taking a big hit in that, going, there has got to be a way to protect myself from this, to not suffer these huge losses that give up months worth of profits.
That's
It,
right.
it turned out that that zero options are priced based on the probabilities of the options. So
That's right.
if you don't trade with an edge or a stop or something, those probabilities will play out over time. If you
That's
have a
right.
98% win rate, that 2% is going to take you back to zero every
That's right.
time.
Absolutely.
2% losses will
Yeah.
take out all your 98% wins.
Yeah.
So it's a zero sum game. So you have to find a way to have an edge and or control your losses. So
Yeah.
I started looking at adding stops to the 7-day options. Now, it doesn't protect you from a big overnight
Yeah.
change, but it protected you better than no stop.
That's
And
right.
so I did a ton of back testing before there was any good back testers out there.
Mm.
And that's one thing. Optionetics did have a program, I don't even remember what it was called, that you could test, and it was just end of day data.
Yeah.
But I was looking intraday to see would that open high low close if that high or low would have taken me out of my
Yeah.
trade during that day, and I'd count it
Okay.
as a win or a loss. And I just did a bunch of back testing like that, kind of slow, day at a time or trade at a time back
Wow.
testing. It
Yeah.
was it was brutal.
Torturous.
And
Yes.
but that taught me that, using a stop could improve the edge on those 7-day options. So when this person asked me to mentor her about the zero DTE, I got in and learned what they were doing, and I realized, hey, they're making a bunch of trades, making a bunch of money, and then giving it all back. We use a stop on zero DTE. There isn't a time when the stop doesn't work. Like in 7 days to expiration options, if you're trading overnight, the stop does you no good.
That's right.
But in
That's
zero
right.
DTE, man, that stop is great protection
Yeah.
and can get you out. You can set what your risk level is based on your
Right.
risk tolerance. And so it was that. I think it's that key that what I brought to the zero DTE world is using stops. And I've just religiously talked about that. Now I still see people trading without stops, and yeah, they'll do okay for a while, but there'll be a time where they get blown up, and
The
I hate to
2%
see
will
it.
get them.
Yeah, 2% will get them.
That's
Yeah,
right.
and
Well,
so so that kind of is a little bit of my journey and how I got into the zero DTE, kind of by somebody else asking that they wanted to learn it, and so I learned enough to teach her, and then just kept going because they
that's now.
just
Let me
uh,
ask you. Is she
yeah.
still? I'm more fascinated with the story. How is she? Is she still trading?
She is still trading, and she's still looking for mentors to teach her the next great system.
Now what?
So,
See, and that's yeah.
yeah,
That's
so there are those. Yeah.
yes, yeah, and it's um, yeah. I was going to get in now into the following the rules, but could
Yeah.
you maybe give a little bit on just in a nutshell, what do you do? Give me this another Barbara Walters question, but
Okay.
give me a day in the life of Tammy in terms of, and maybe you can bring in some of these words in the world of Tammy, tranches and
Uh-huh.
stops. And because
Okay.
some people have, if we ask 5 people on the street, tell me about a stop order, what would you do? Now I know Option Omega just came out with these OTO. I don't know if you saw that. These
I did. Yeah.
orders, which were, I think, they were saying are really good for credit spread type traders. But maybe give a day in the life of Tammy when you're trading. What are you trading? Like what strategy? Some idea on how you're, setting it up. These tranches, the stops, just kind of, you know, how this looks, because this can be from the outside, it may appear busier than it is,
Mm-hmm.
but it's yeah,
No,
maybe
it's
just
still
give
pretty busy.
okay, maybe bring us into the life of Tammy
Okay.
and give us, in the morning, maybe start with what is the key strategy and just kind of what's this day look like, just for
Sure.
somebody maybe that is at home that is thinking, you know, is this something I can do? Is this
Sure.
something that I think I could, paint a picture for us if you could.
Okay.
All
Okay.
right.
Well, to continue the story, I'll kind of link this into
Yeah, yeah, yeah,
how I got started. When I first started trading zero DTE, we were just entering at the open using that morning volatility and entering our trades then and just throw them on and do or die
yeah,
with the stop. You
yeah,
get stopped out, you're kind of done for the day. Um, so that worked for a while, and I was throwing it all in, like however much I wanted to risk, gain or lose that day, I was kind of throwing it all in on that one trade.
yeah,
I realized that by spreading that out over time and doing multiple entries, that you spread your risk out, and you've got the possibility of maybe that first trade doesn't make it through, but maybe some of the others do make it through.
yeah,
So there, I just through a series of events, learned the multiple entry iron condor. I gave it that name when I
Yeah.
saw what people were doing. And my typical day is kind of wake up. The morning is mine to do whatever I need to do. I always have my a 1 minute chart on the SPX up, and I'm just watching what's going on in the morning. Like today, today is the August 20th, and we're waiting for minutes to come out, and the market's just going crazy. It's up, down 60 points, and then up 30 points off the bottom. It's just going crazy. So today is a day I would not trade, even if it was like I'm not trading because of the meeting minutes, but with that kind of volatility, I just would choose not to trade today. So I very much watch what happens in the morning. And, if it's nice and calm, fine, then I'll enter my trades. I don't start entering until 11:30 Central or 12:30 Eastern time. And then I usually do 6 entries, roughly every 30 minutes. And so if someone was thinking about doing this and wondering how, what kind of time commitment it would be, you would need to be willing to dedicate, if you just want to do 1 entry at the open, that one and done, you could do that. And that has certain probability of working out. And that was a good trade for a while. But I think as the market got more, as the market changed, I was looking for other things that could work better. So this multiple entry seems to have some staying power just because of how it works. So I'll enter every 30 minutes. I enter an iron condor. I enter it as a put spread and a credit spread. So I enter the legs separately. I try to get equal credit on each side. And I target about $1.50 on each side for total credit for that side. Then I place my stop, and on this strategy, I use a 1x net stop. So meaning I set the stop for 2 times the initial credit, and that gives me a 1x net loss after you take the loss, subtract the credit that you got. And that has about a 54% win rate. And over time, I've kind of figured out that like this year, I figured out for every hour I trade, I make about $250. And so it's been very profitable. That doesn't mean, with the 52 to 54% win rate, that doesn't mean that every trade is profitable. You can have days where every trade stops out. Those are pretty rare, but it's about 7 to 8% of the trades every trade will stop out. But in most days, you'll have a few more trades win than lose on most days. A lot of people that trade this strategy, and I don't have a profit stop. I leave all trades on to expiration unless they stop out. So that lets the probabilities of the options play out. And I have videos on YouTube that go over this strategy in detail. Just search for my name on YouTube if somebody wants to learn more about it. And but so I place those trades. I've finished entering around 2 Central, 3 Eastern time. And then I just watch what happens in the market the rest until the market closes. And I tally up my wins or losses, and I post those every day in my Discord, which is Quantum Options, or the Quantum Options Facebook group. I post them both places because different people got 2 communities going there. And specifically for 0 DTE trades. Now, the Quantum Options Discord group, there's a lot of people that trade a lot of different things, and there's channels for other strategies. But the strategy I'm focused on is MEIC, the multiple entry iron condor.
I'll just ask a question just because I want to give you a chance to to rest your
Yeah.
voice for a
Okay.
second. So I
Thanks.
thought this might be a good chance to throw a few questions, give you a few second break here. But I'm fascinated. So you're coming in at about 11th. So a couple questions, and I'll
Uh-huh.
try to at least go a minute with my asking the question, so you could get a break
Okay.
here. But what made you, okay, I'm going to start at 11:30 versus starting at 9:30 in the morning is one thing.
Hmm. Yeah. Why those
And
particular times?
yeah, why those particular times? And the other question that pops up to me right away is because I know, you know, if I'm doing any 0 day spec or range bound at this juncture, I'm getting better at trusting the data and back testing. Matt at Option Omega is always, Dan, trust
Uh-huh.
the data. And I'm like, I'm old. I've been doing it. I've got bad, because you do a lot of what I've been doing. I'm getting better numbers this way because, the data is important. But the other question besides why starting at that time is, how do you get, again, I keep forgetting the word, it's not subjective or arbitrary.
Discretionary.
That's the word,
Yeah.
discretionary in this area. Yeah. What, a couple things like, what what would be considered discretion? Like today, as Tammy mentioned, August 20th, we were down 60, up 30. You have some news coming out with the Fed minutes that it could be a little more of a curveball than usual because some of the people who dissented. Would you say average once a week you might not play, or what goes into deciding whether to play or not? What two or
Okay.
three things that you kind of, so those two, the time starting at 11:30, and when do
And
you,
when,
as
okay.
Kenny Rogers would say, when to hold them, when to fold them, when
Yeah,
to play, not to
exactly.
play. All right.
Exactly.
Yeah.
Well, why those times? One thing that I have always done ever since I back tested for those stops in 7 day options, I have been a big proponent of back testing.
Yeah.
Like you have an idea, it's like I had. Uh, it- it's like testing your theory before you actually put real money on it.
That's right. That's right.
And so I've always been a big back tester. And with the zero DTE, like I know that certain times perform better than other times for
Mhm.
whatever reason. I couldn't even tell you the reason. But I do know historically over certain, and it depends on the time period you're testing, whether it's a short time period or a longer time period. But I tend to test, at least a year out, and to get a good idea of what something's going to do, and really test longer than that.
Yeah.
Just test different periods.
Yeah.
Test 2017 to 2020 and
Right.
20 to 25. And luckily now we're getting some years where we've got zero DTE options that
That's
we can
right.
test. So,
Right.
when we first started, we didn't even have zero DTE options we could test. We were
That's
testing
right.
Friday options and then
Yeah. That's
Monday,
right.
Wednesday, Friday options. That's all
Yeah.
we had. So some of that is dependent on what you've got.
Yeah.
So it's just back testing that uh, there was some initial back testing that was done by a friend of mine, and he came up with the starting at 11:30 Central, 12:30 Eastern,
Yeah.
and those times were what he tested over the long haul. And I'll occasionally go back and retest it. That was his testing was done in like 2020, I believe. So it
Okay.
was from 2016 to 2020, 4 years.
Okay.
But those times still, if you look from 16 to current, they still end up being the best times. But every month I look at it because I also think things can change in the market.
Mm.
Like when I was trading the just a single entry at the open, there were periods of time for whatever reason that it just didn't work.
Yeah.
I kept losing and losing. So I finally stopped and would look at it. Why is this going on? What's different now than a few months ago?
Yeah.
And using backtesting again. And sorry, I'm gonna.
No, go ahead. And I'll just make a comment here.
Okay.
Just to, and I think what's good is sometimes we love to know the answer to everything. And that's good. But you're right. Sometimes when you back test, if something doesn't work, sometimes if you with a little bit of research, you can maybe peg it to news, or you can peg it to, volatility, just like people in 2022.
Yeah.
Yeah, it was a higher volatility environment, at least I remember, from January to October. So for people doing double calendars, it was nirvana, or whatever you want. And even for iron condors, a higher volatility, good. Even though I think with iron condors, a low vol environment could be wonderful too. So
just get
go
less
ahead.
premium.
Yeah. So in terms of the time, starting at 11:30, that makes sense. And then, what was the other?
Whether to trade or not, like
do I or don't? Because I think some people will say the data, and I'm going every day, and do you feel, is there ever like conflict in your mind? Like, I'm not, I think like Beach Boys, there was a song, be true to your girl. I don't even know what it's being true to.
I don't know that song.
Yeah. How do you kind of wrestle with those?
Yeah. Well, whether to trade or not, it just is based on what the market is doing. And it kind of depends on volatility at the time. Like I have found through backtesting, and thanks to Option Omega for their great backtesting system, that they were one of the first to come up with zero DTE testing. Yeah. So I was so happy to see them develop that.
Yeah.
But in testing this in different volatility markets, like I traded options back in, it was probably pre-2017, when VIX was like 9 or 10. It was, man, premiums were so low. Yeah. But you could still trade. It's like the whole probability system still works. It's just lower premiums.
Right.
So, like some people have tried to say, well, for zero DTE or MEIC, maybe we don't trade when volatility is less than 15 or something. But I still think it's tradable. The overall volatility, which I judge by VIX, the level of VIX, the overall volatility makes no difference to me. It's just the whole system is going to adjust up or down in premiums based on what the volatility is, but the process still works. The strategy still works in whatever environment. But I will look, and if I can avoid stepping in front of, like, okay, let's take it like this. Most of the time, there's a train track crossing right down the street. Yeah. Most of the time, you can go across that train track stopping, and you're not going to get hit by a train. It's hardly ever a train comes through. But some days there's a train coming. You don't want to be on the tracks when the train is coming. That's right. And I view a day like today as a train is coming down the tracks, and I just want to stay away from the tracks today. And
so would you say you're relating it to, maybe the two things would be some type of news type thing that could be coming out, or
definitely,
maybe number one, and then maybe two, would you look at, okay, I'm starting to trade at 12 or 11:30 Eastern, right? And by then we have an 80-point range in the market. Would that bother you, or would the news bother you more?
Both. Okay. I can't say one or the other, because they both are a factor. 2 days I will not trade are FOMC, and usually FOMC minute releases, the conference call and the minute releases. Now, I think, like, there was a time that before COVID, I didn't even pay attention to when FOMC was because it had no relevance in the market. They were keeping the interest rates the same. It had been the same for years. It just didn't matter. Or maybe they tweaked it a little bit, but it just didn't matter. And I think that time will come again, but it's not right now.
Right.
So, and I'm watching pretty carefully. Like last time, the last meeting minutes release, basically, I could have traded that day and I didn't. Like there was nothing that happened in the minutes release that caused the market to go up or down or whatever over. I'm looking at for moves in this volatility environment of, 10 or 15 points or more. And there was nothing in that announcement that caused that kind of move. Now, today is a little bit different. So people are kind of expecting that the minutes might have a yay or nay on whether they adjust interest rates in September. And so, it could be a little more volatile. So I'm staying out again today. And but there may come a time very soon that, where we get through this period of having to reduce interest rates and it becomes kind of the norm and things kind of settle down and we can trade meeting minutes releases and even FOMC. But right now I don't. Now, other days like CPI or PPI or unemployment, I trade those days because the news comes out in the morning and usually, it may affect the market for the first hour or so, but it kind of settles down after that. And it's another advantage of waiting until, 12:30 Eastern. It kind of, the news gets incorporated in the market and then the market kind of settles down. So I look for a pretty stable market in the hour before I enter.
Good point.
If it can do this crazy stuff, but in the hour before I enter, if it starts settling down and it hadn't, it's within a 10-point range or so, hey, that may be a good day to trade. So I'll go ahead and enter on those days. So but if the market is moving, up or down 30 points all the way up until the time I enter, I'm not going to step in front of that train. And it's the MEIC works well in a trending market. It works well in a flat market. It doesn't work well in a choppy market because that's when you get stopped out on the put side and the call side. On both sides, that's the time you lose the most.
Two questions. It's interesting when you say, because we're in a very low volatility environment now, like in the 15s or whatever, 16. Yeah. And Tammy's saying if it moves 30 points, which you would think if it was a 24 volatility environment, 30 points is nothing, right?
Yeah.
But in the environment, and that's can be, there's not that much movement. So but the question I was thinking of is when you do multiple, so you start at 11:30 and every half hour you enter, are you doing the same size or do you switch? Do you maybe ever do more at a certain time period? What's your thoughts on that?
I enter the same size on every time period. I may, if I've taken several losses, and I may size down. I'm always checking my account to make sure I'm not risking more than 2% of my account at any one trading day. So if I lost on every trade, what percentage of my account would that be? And I never want that to be more than 2%. So if I'm in a drawdown and all of a sudden, say I was trading 10 contracts, and all of a sudden, if I entered 10 contracts, that would be risking, say, 2.25. I would size down a contract or two. And I would just keep doing that as my account size changes. So that way, I can never really blow up my account. It just, as my, if I go into a deep drawdown, I'm just trading smaller and smaller. Now, the hard side of that is if you start winning, it's going to take long. I'll also use that to size up. I won't just size back up to where I was sizing. It's always based on that 2% of my account.
That's good.
Yeah. So that keeps me always risking the same amount. It just, no matter what size account, if you use that rule,
Okay.
it keeps you in a good range. And sometimes, if you have a small account, maybe you can only do 4 entries instead of, I do 6 entries. Maybe you can only do 4 entries, and that keeps you within the 2%. And then, you'd have to look at what are the best performing times for those 4 entries, and do some back testing and look at that.
Are you ever, going with using the word discretionary? Would you say, we were talking a little bit earlier that, how you do the iron condors is very rule-based. To me, when you have rule-based, I would think that would give hope to a lot of people because they're not asking you to reinvent the wheel, just follow the rules. In your years of teaching and doing these iron condors, what percent of the people are that you've seen, and this is just human nature, will follow the rules? I don't want to give us a bad hope in mankind, but what do you find it,
Well, I'll answer that. I think it's very hard for people to follow the rules.
Isn't it something?
I'm just sharing what's worked for me too. And I will say that I don't mind people trying to find a better system. That's fine. That's part of, good discussion and good scientific research is people trying different things. So I'm never poo-poo somebody for trying something different. I find it is hard for people to follow the rules. They think they know better. I
was just going to ask you why. Yeah, I think you just answered. I was going to say, why do you think people have a hard time following rules?
Yeah. I think because like that, they think they know better, or they think that can't possibly be right. It must be something else. Or maybe they learned something from some other system that they think might apply. That could be fine. I don't want to poo-poo them for not following the rules, but I know for myself that following the rules has led to my greatest success. And, I understand those rules and why they're in place. And maybe somebody coming in new doesn't understand why those rules are there. And so they think, oh, well, let's not do a 1x stop, 1x net loss. Let's do a 2x stop or a 3x stop. That way I don't get stopped out as often. Well, you take bigger losses when you do that.
That's right.
Or let's say I don't manage each side separately. I manage it as a whole iron condor. So the whole iron condor has to hit the stop. Whatever it is.
Right.
It's fine. I've gone down those paths.
Oh, yeah.
That's the great thing about backtesting. You can try it and without putting real money on it. And so I think people are always testing any kind of, somebody tells them this is the way you do it. It's just human nature to go, why? Why? Well, let me try this and maybe I can do better. And so
let me ask you real quick. We're winding down here, and we can always talk again, but I wanted to see just a couple things. And if there's anything you would want to go over that I forgot, but I'm thinking like the vehicle. You're talking SPX. You do, right? Is there have you considered other vehicles, or what's your thought? Have you found any, NDX, RUD, anything else that you've played with, or are you like SPX the best?
I like SPX because of the liquidity.
That's right.
And the problem with NDX, the liquidity just isn't there. It just, it has bigger prices. And that's one thing I like about SPX versus SPY. But, SPX has the Section 1256 tax advantages of,
that's right.
60% of the gains are counted as long-term gains and 40% at short-term gains tax rate. So that's a good advantage of SPX or any index fund. So that would apply to NDX and RUT. RUT is, one thing that I rely on is backtesting. And right now I can't find a backtester that has RUT in it. I know I've asked Option Omega to add that, but they haven't so far, at least the last time I checked. So
Okay.
I don't want to put my money down on it until I can backtest it.
That's a good point. How
So,
about E-mini? Does E-mini options have 0 day? Have you futures?
to be honest, I don't know. I don't trade futures, so I just never have gotten into that world.
I don't either. I've stayed, yeah.
The issue with that though is fees. As I understand it, the fees for futures are higher than they are for options. Now,
Okay.
maybe the leverage that futures gives you, maybe you can make more dollars for less fee dollars. I don't know,
Okay.
but when you have a 52% win rate, things like fees, the slippage, things like that become very important because you have so many occurrences. Like I'll have, 20,000 trades a year. I'm guessing roughly 20,000 a year. Multiply that times your fee and you
Oh, it's
see how
crazy.
much that adds up. And
Yeah.
anytime you can reduce that by 10 or 15 cents, it makes a big impact on profitability for the year. So,
Yeah.
those little things like fees become important. So SPY, even though they don't charge the CBOE fee, it's still 10 times the option fee to even get to the level of one SPX fee, and it's just the fees are higher for
I got you.
SPY. So if you had a small account, then maybe that would make sense.
Okay.
But I'm sort of grappling as my account grows, that how do I trade this many contracts
That's right.
and in a big account, and how can I reduce those fees, and you know just how do I trade this many contracts?
I agree.
And I would love to diversify, like trade some in SPX and some in RUT and some in NDX. But right now, I just don't have the tools to do that with,
Yeah.
I don't want to trade, I don't want to put real money on RUT without having tested it.
Absolutely.
And so plug in for Option Omega to add RUT to their backtester.
We'll tell Rusty in the group to get you. Yeah.
Yeah,
Hey, real
please.
quick. I was trying to end this in a couple minutes, give you a break, and we'll,
Uh-huh.
even though because the more the more interested and fascinated it is. One question just came up. You mentioned something, and probably the answer is the back testing. You said you win maybe 54%. Obviously you've played with, okay, can I get a better winning percentage? Maybe can I get out of the trades earlier? Obviously you've gone through
Mhm.
all that
Yeah.
homework to find out, you know, do I get out earlier and avoid some of the price move, but do you're taking less? That yin and yang of, do you get out earlier? Could you get a better win rate? But I'm
Yeah.
guessing the answer will be partly I tested it. And
Yeah.
what could, yeah.
Yeah. Because
Dan, I
people
tested
ask me
it.
that question all the time. And I go into that in the video. I posted a video in April 2025 on YouTube, and I go into that. It affects the expectancy model. Yes, you might win more, but your win-loss ratio changes,
Hmm.
and you're losing more than you're winning. And so on a low probability trade like an iron condor or this iron condor, um, it just doesn't make sense because all of a sudden your win rate may be increasing a little bit, but your losses compared to the wins are increasing more. I mean, they're becoming a bigger percentage of the dollars, and so it doesn't. The expectancy model doesn't work,
So are the
at least
short
in
delta,
my what I've
okay.
looked at.
So are the short deltas probably around 20 or less? Over
They're around 20. Yeah.
Okay, so you're getting a decent, what's nice is you have some probability, but
Yeah.
you're getting a good credit.
Yes.
But on something like that would be a higher, it would be a little bit lower probability than a 10 or 5, but you're getting a little more meat
Yes. Yes.
I like that.
And I also do testing on different credits. Like you can get a you can make more money ultimately, have a higher return rate
Return.
if you go for a higher credit, like 220 or 230,
Yeah, yeah.
something like that. But the thing that happens with that is your drawdowns increase exponentially with that
Oh, you
too.
get
So you
a
have much higher drawdowns with the higher credit than you do with 150. Now you can go the other way and trade a smaller credit. You make less, but the drawdowns are still smaller. But
yeah.
there's kind of a fine balance in there between
There-
making good money, making enough to live on, and
Yes.
because I am doing this full time now that I'm retired,
Yeah.
and if someone was doing this full time for their, like I've got my nest egg, this is just
Yeah.
all gravy.
Yes.
But if someone was doing this to earn a living, that would be a tough balance. You don't want to be in drawdown because you need that money to pay your rent each month or something.
That's right.
So
Yeah.
so you got to pay attention to those drawdowns. And I think a lot of times people get attracted to the shiny object, like, ooh, I could make more money doing X. But they don't realize the downside of, yes, you can, but you have a higher drawdown. And then they start whining like, oh, I'm in a 5% drawdown. I just can't win. And like a 5%, well, how high was the drawdown in your back test? Like 25%.
That's
And you're
right.
whining at 5%.
That's right.
And
I know.
so it just,
People are,
yeah,
yeah,
you got to realize like somebody said, for every gimme, there's a gotcha. And,
that's right. It's a,
so
yeah,
that's it. You got to look at both sides. So
yeah.
I tend to pay attention to more, how much could I lose,
Okay.
and protect myself against those losses, and then balance it out with a good return, as good a
That's the
return
way.
as I can
And I
get
think
for,
that's the, yeah, way to
yeah.
think as a risk manager. Well, Tammy, I don't want to stop it because
Yeah,
you're
we'll do it
fascinating.
again. We'll do
Yeah,
it
we'll
again.
we'll do a part two at some point. But thank you for taking time. It was a pleasure.
Yeah.
I learned a lot. I hope people listening learned a lot. And I'm going to go watch the April 2025 YouTube
Yes.
and give you a lot of thoughts. And again, remember what Tammy said. Sometimes people struggle at the rules, and the success of a strategy could be just follow the rules. You
Yeah,
don't have to
exactly.
reinvent the wheel. Listen to Tammy. So thank you so much, Tammy.
You're very
We
welcome. It was a
appreciate
good
it.
interview. Good
Yeah.
questions.
Thanks for having me. Yeah, thanks for doing it. All right, we'll
Sure.
see you
Thank
see you
you.
later. Thanks.
Okay.
All right.
Bye.